You guys know I love trading precious metals. Today we're going to look at gold. Hang around. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a descending triangle on the precious metal gold. We'll look at that, but first we've got some active trades to check out. Later on we'll look at Tim's trading maxim. Welcome to Friday. I hope none of you guys are having to deal with Hurricane Sally down on the U.S. Gulf Coast. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's look at the active trades. Palladium pushed down really close to my stop right down here. Actually, it's a couple of dollars off. Currently holding it at 22.90.56. I did not get stopped out. Got 297.85 locked in per contract. Thursday, Google hit our first target right there. Got half off for profit, moved the stop to break even. Now we wait for this parabolic SAR to get down here below our stop, and then we'll start trailing the stops on this one. The weekly setup, US dollar, Japanese yen, is attacking the support of 104.50 right here. Just so you remember, we're looking for a weekly candle close below that level to sell, so watch it ahead of today's close. As you know, I record these videos on Thursday, and it looks like the Bank of America bear flag setup could trigger a sell signal today. So if it did, I hope you got it. And that's all the active trades to look at today. Let's look at today's trade pick. Gold is looking like a descending triangle right here for the last month or so. The descending triangle consists of a strong support level like this one here at 1900, with several historical touches or approaches of the line, and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at the buy orders until it finally breaks through. It should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to sell a daily candle close below the triangle or below 1900. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to this volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate that percentage by taking this number here, dividing it by this volume average right here, and it should give you 0.75. If it doesn't give you at least 0.75, I suggest you stand aside on the trade. The stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. So on the day this breaks, it's going to look something like this. And just ahead of the close, say 15 minutes before the close, you're going to set up your sell order. You look down here at the ATR, you'll multiply that by 1.5, measure that distance above the entry, and that'll be your stop loss. Measure 1 ATR below the entry, and that will be your first target. If after entering the trade we get a close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on gold. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 67. Inaction breeds doubt and fear. Action breeds confidence and courage. If you want to conquer fear, do not sit at home and think about it. Go out and get busy. And that's a quote from the great Dale Carnegie. For the benefit of those who don't know, Dale Carnegie was an American writer and lecturer and the developer of courses in self-improvement, salesmanship, corporate training, public speaking, and interpersonal skills. His books and training courses are still regularly used today. In fact, I believe my 30-year-old son enjoyed attending a Dale Carnegie course not too long ago. I don't think this quote requires much explanation, except that sitting on your butt and watching Netflix is not going to conquer your fears. Get out and get busy. Remember our gold trade plan today. We're going to sell a daily candle close below the triangle or below 1900. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box below. If you're following the Dream Trade setups from my Wednesday videos, it looks like AUB came down very close here a few days ago, as I mentioned, but then it's just been going sideways. I'm going to give this a little bit of a chance to go down and hit 2177 so I can move my stop down to break even right there. In this week's Dream Trade, Bloom Energy still hasn't triggered. I still like the look of it, and it's definitely attacking the 50 SMA, so I'm still watching this for a trigger. Don't miss the Dream Trade segment on Wednesday's videos. Click the link below to find out more about Dream Trades. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education series next Wednesday when we'll be talking about MetaTrader's chart properties dialog. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great weekend, and I'll see you on Monday.